Soon your money will be worthless. The new record high in the evolution of the consumer price index has reached 10.7%. This puts a huge pressure on the European Central Bank. If this evolution continues, our money will become completely worthless. What can you do about it? How can you protect your money? You will see it right here on the Money Network, right after you hit the like button for the YouTube algorithm. The Money Network is growing steadily, 1,710 members already. Are you in? 10.7% inflation. These levels have not been seen for decades. Ever since the first year of recording in 1997, 2 years before the implementation of the euro, never have we seen such high inflation levels. If you look at the Belgian level, we have to go back to 1975 to see the same inflation levels we can see today. For Germany, we have to go back even further in time, to 1951. These inflation levels are exceptionally high. If you look to the whole graph of Europe, we see that we are pretty bad off, especially in the eastern part of Europe. This graph from June of this year shows a lot of Eastern companies struggling with the inflation levels of 15 to 20%. In the news, often the high energy prices are blamed for the exponential growth in inflation levels. But if we look back at the previous graph, we can see that the core inflation levels, that's the inflation levels without energy, drinks and food, are also at 5% already. Another record in itself. The expected evolution of the inflation remains uncertain, but we do see a drop in energy prices, especially the gas prices. The Dutch gas prices, which are the European reference, dropped down to 92 euros per megawatt, before they went up again a few days ago. Goldman Sachs also expects prices of energy to drop by 30% in the coming months. Moreover, the rather good weather we had in October is also expected to continue throughout the first part of November. This rather warm period reduces the consumption of energy, reducing the demand. A study by ENTSOG, the European Network of Transmission System Operators for gas, notes that due to the rise in prices and the high temperatures as of last month, Belgium is actually using 30% less gas this year compared to the average of the last few years. However, the uncertainty in the east of Europe is still not subsided, and the future gas supplies can still be disrupted. These high inflation levels put a lot of pressure on the European Central Bank, because if they do not act quickly, all your money will lose value faster than you can actually make more. Inflation levels of 10% mean that your money in the bank is losing value very fast. Your purchasing power is reduced by 10% every single year. A 100 euro note will buy you 10% less of the same items 1 year from now. So it's the responsibility of the European Central Bank to keep this inflation under control. Their target, their aim is to get inflation to around 2%. They have been doing it for years, or have been trying it for years, and now they're really failing. But in a nutshell, they can try to lower inflation by raising the interest rates, and they have done so in the past. Over the past 6 months, the interest rates have been going up from 0% to 2%. It does not seem a lot, but it's actually a very big deal. However, for now, it's not enough. So the European Central Bank will probably raise the rates even further. Experts believe that they will go to 3% and maybe even higher over the next period of time. All of that in hopes to lower the inflation back to acceptable levels. But the European Central Bank always looks to the other central banks before making any huge decisions. In this case, they look at the Fed. On Wednesday, the Fed raised the American interest rates by 75 base points. The interest rates in the USA are now 3.75% to 4%. However, Jerome Powell did suggest that the next interest rates might be lower than previously expected. With inflation levels out of control and interest rates going up, companies are struggling to make ends meet. And this will most likely result in a recession this winter. As a private investor, there's not much you can do. You can't save the economy on your own, but you can make plans for your own future. Even though these times look tough and big investors are investing very, very emotionally, the stock market will remain very volatile over the coming 6 months. The Fear and Greed Index has been strengthening a bit last month. Due to some soothing news, hope is slowly restoring. But it's not over yet. To be sure you come out on top, you should stick with your investment plan and keep investing every month to make sure that your wealth keeps increasing over time. You will get through this together with the Money Network. We thank you for watching, and until next time.